Tortoises, if you are earning good money, but your financial future still depends entirely on your salary, then this video here is definitely for you. Today, I sat down with Merlin, one of my current clients, who not long ago came to me with a specific problem. He had money in a savings account, he was earning good money, but what he didn't have was a clear path and confidence to start putting that money to work. And he's not a finance expert, he's a busy professional, just like most of you watching this right now. And so that's part of the reason why I wanted to bring him right here to share his experience, because I honestly believe that what Merlin has achieved over a relatively short period of time can be replicated by every single one of you, if you just have the right framework and the right guidance. I hope you enjoy this video.
Fantastic. Cool, man. So then, all right. Okay, so you ready? Very, I mean, I just, as always, mate, I want you to be as transparent as possible, because everything that you learn, the good and the bad things, will definitely help the audience. Yeah. So just be yourself. Right, so let's discuss this. Could you please introduce yourself? Talk a bit more about yourself.
Yeah, so my name is Merlin. I work in tech sales, and I've been doing that for about 7-8 years.
Okay. So have you always worked in that field?
Not always. I've done a few different interesting jobs. I was a ski instructor prior to doing tech sales and some other stuff before. So I kind of just fell into that.
Awesome. So what was your investing situation before joining Like a Tortoise?
Yeah, so I would say my investing situation was, I'd liken it to maybe going to the casino. I'd kind of, put money where there was hype and where there was speculation. And I think not all of it was bad. I had some, like when you go to the casino, sometimes you win, right? So I put some money on the S&P 500, which that is still going well, but I didn't really understand why I was doing that, other than someone told me this is something you should do. So it was kind of like you have some wins, you have some losses, hit and miss, I would say.
You have some wins, you have some losses. Would you say you were feeling some frustration about the returns that you were achieving at the time?
I would say so, yeah. I would say that the wins did not outweigh the losses. Normally I was finding myself breaking even most of the time. I was not in the green. I was kind of flatlining. The wins would happen, and then the loss would easily eat up that profit that you'd made in the win. So it was never just positive.
What made you seek coaching?
You reached out to me, and I really liked the simplicity of your offering. You said to me, we can double our money every 4 years, which, when somebody random messages you and offers you that kind of thing, you think, is this a scam? Obviously we had a chat, and I could tell that you were genuine and that you broke down the way that this happens. So that I was frustrated slightly, but I think it was more the appeal of the simplicity of your offer that made me think, oh, you know what, there is something to this, and it would be great to know the way that you can make it work for you.
To be fair, initially I was sending messages like this. Listen, would you feel like I believe I can help you achieve 15-20% returns per year? But then people wouldn't really reply. So what I did, because many people don't know exactly what that means. But then when I switched that, it was the wording. Okay, so what does that mean on a yearly basis? Well, it means that if you compound that 15%, you are doubling money every 4.8 years. So if you do it at 20%, you are compounding, you are doubling your money in a small amount of time. So that's what it means. So I just phrased it a bit differently, but the response that we started getting changed dramatically. And yeah, so awesome. And why as before I know that I reached out to you, were you approached by anybody else?
You have kind of people that are money managers and financial advisors, but the thing that I always didn't like was that the kind of fee seemed disparaging, and it was we take a car, and I don't know, it seemed more like smoke and mirrors. Like you didn't really understand what was happening with them, with your money, and it was kind of I guess similar for me to investing in the S&P 500, where I'm putting money on this, but I don't really have any understanding of what is happening there, and it was kind of like a bit of hit and hope scenario for that.
Yeah. Because when you invest in the S&P, you are buying 500 companies, and it's impossible to understand all of them. I mean, that is one of the reasons I never really liked investing in the index. I like to understand businesses, but I don't like every business. And they are in some of the constituents of the index don't really resonate with me. For example, tobacco companies. I don't want to put my money in tobacco companies, just to give an example. Not to say they cannot make a lot of money and be very profitable, but it comes down to our values as well here. So yeah, totally understand where you're coming from. And so tell me a bit about the transformation. So what has changed the most since we started working together?
I would say that there is a very clear framework that I have now that I can follow if I'm thinking about investing some money. I know these are the things to look for, and these are the things to avoid. So it's very well structured. What I'm looking for in terms of a company to put some money away for the future. So just having a guideline is the clear difference. Before, there was none of that. It was kind of just, oh, that sounds cool, and there are other people doing it, like with crypto. There's a trend. It was more trend based rather than based on any kind of fact.
You came with little knowledge around value investing, equality investing. Was there a specific moment or lesson that really changed your perspective as far investing wise?
I would say not a massive particular moment. I'd say that there are building blocks, right? Where like you learn a bit more, you learn a bit more, you learn a bit more. I would say the kind of standout thing is being able to calculate the intrinsic value of the share price of a company. I would say, like, we spent a fair bit of time understanding how you do that and the different ways that you can do that, and what you place value on when you're doing that. So I would say for me that kind of is a bit of a thing that stands out, that is a cool thing to be able to fall back on and say, well, this is why I'm doing this, along with all of the other stuff.
Cool. Yeah, exactly. And that's that's probably what I like the most about investing. I like calculating intrinsic value. Is just, at the end of the day, if you can buy an asset, we don't do this, but because we like to buy quality companies, as you know. But even if you buy a rubbish company, but you pay $1 for, you pay instead, so you buy $1 for 50 cents, it's going to be very hard not to make a good return on your money, even if you buy a terrible company. After all, you are buying the assets for less than what they're worth. But then, of course, we like the blend of quality and cheapness. It doesn't, just quality won't do it, because just cheapness won't do it, because typically we like to hold them long term, right?
Of course.
Okay, so one of the things we talk about is building wealth without making investing a second job. And so, as you know, everything that I try to do and to explain is, I really try to explain a framework that accommodates people's busy schedules. So how has the framework fit around your work and personal commitments?
Yeah, it fitted really well, I'd say. You're pretty flexible in how you're working, which is great for someone working a full-time job. But I would say that the beauty of what you're teaching is that it's not a full-time job, right? You preach the kind of rule of dedicate 1 hour a week to this, and then you will have the returns that you want, which I think 1 hour a week is it's not that much, right? And if you want anything in your life to grow and flourish, then you need to dedicate some time to this. 100%. So I think an hour is not a lot to ask. And actually, I think once you uncover the kind of fundamental stuff and you get into things, it can actually be pretty enjoyable and a fun thing to do, because making money is fun. So of course, understanding the building blocks to do that, if you can find the pleasure and the joy in this, 1 hour is not any kind of time. And actually you can find yourself doing more than that, because like I said, you can enjoy it. True.
How many companies do you own in your portfolio right now?
I think 8.
8 companies. Awesome.
Yeah.
And for each of them, you have a good understanding of the businesses now. So you apply the framework for each of them. Do you feel comfortable owning them in your portfolio and understanding the companies instead of just shooting in the dark?
Yeah, absolutely. And it's nice to a lot of, I mean, some of them are kind of household names, right? But the ones that I really like in there are companies that most people, they wouldn't have heard of, but actually they're phenomenal businesses. And it's the world is like this, right? Like you see things on the surface and everything works smoothly, but there is so much stuff happening behind the scenes, and I love those companies maybe more than the kind of household names. But I feel comfortable in all of them, and
cool.
Look forward to seeing how they grow.
Yeah, and one of the things, going back here to investing around the busy life, one of the times where we really need to just follow up with the companies that we own is when they report earnings, right? Something that I always tell you guys, because they do that once every quarter, but that's when they share with you, share as a shareholder, how the business is going, what's going well, what's going poorly, what are they doing to mitigate like the problems. And that, other than that, the maintenance that you have to do is pretty minimal. And so if you average it out, it's probably around one hour per week, which goes back to what we were discussing. So would you say investing has become simpler or less stressful?
Yeah, definitely. I'd say working with you removed a lot of the mystique around investing, right? Like you know about hedge funds, and you watch things like Wolf of Wall Street, and it all seems kind of like slightly abstract and something that I need to be like a stockbroker to like really benefit from the kind of the markets. So it's nice that you kind of broken it down in a way that makes it accessible for somebody who's not a full-time stockbroker, right? For someone who is doing other things with their life, that this is something that can slot in and make a positive impact for anyone's future, basically.
Understand. And if I were to ask you, you already touched on some of them, but what would you say are the biggest benefits you've experienced? You can just tell me a few words, something that comes to your mind.
Yeah, I would say simplicity.
Okay.
When knowing what to do with saving money, right? Like it's a thing that you're told from when you're a small child is, you should save your money. But that, saving is actually just the first step, and you can do more. And everyone says you should make your money work for you, but simplicity and clarity when it comes to this is the best thing that you can do to make your money work for you. When you're not watching it, I would say simplicity and clarity, and understanding of why you're doing a certain thing with your money.
Understood. So would you think, who would you think could benefit most from this, from what you and I have done
Yeah.
over the last 6 months?
I would say anyone who works a job and is not sure what the best thing to do is with their savings. The kind of standard savings bank account with whatever, like 3% interest, that's fine, but you know, you can do more with that. So I'd say any normal person who has some savings and maybe doesn't have like a big understanding of the investing market, that's the right thing for them is to call Eduardo.
Yeah, also, yeah, and you were talking about savings in 3% on your money. I think right now inflation in the UK is at about 3-ish, if I'm not mistaken. So you are definitely losing money.
So a good point. Yeah, it's a good.
Guaranteed to lose money by keeping it in a savings account like that gives you like 3%. So for example, with Lloyd's, my money was only getting 1.5%, if I'm not mistaken. So that really like puts things into perspective here. Cool. So if a friend asked whether they should work with me, what would you tell them, in all fairness? Mate?
I would say, yeah, definitely. If you want to understand the workings of investing in the stock market, then 100%, yeah, you demystify why people invest in certain companies, and you know, why investing for the long term is actually not that complicated. And you know, once you take the time to understand this, it's pretty logical and everything makes sense, right? It's the thing you say about that in the short term, the stock market is a voting machine, but in the long term, it's a weighing machine. Like, this kind of always sticks in my mind. And you know, sometimes to take the emotion away from, if you've invested in a company and currently it's slightly underperforming, then that long-term vision of where that will get to is something that you can rely on and feel secure in.
Yeah, and the thing here is that some of the companies you put your money into pay dividends. So while the stock is either flat or in a downturn, what happens is you are getting paid, as you know, to wait. Not only do they pay you dividends, but they also reward you via buybacks, right?
Yeah.
So they essentially increase our ownership in the company without us having to put more money into. And yeah, and it's exactly like you said. So you are quoting Ben Graham, who, for those who don't know, watching this, was Warren Buffett's mentor. And this is so true. And you can see that even 60, 70 years ago, he was already talking about the same things that we are discussing today, and things that I teach you as well. So yeah, man, just take that and continue to apply that throughout your investing journey, because I think you will do very well. And I know your portfolio, of course. I think you have solid companies that have not been around for 3 or 4 years. These are well-established companies. They make a lot of money, and you bought them with a big margin of safety. So fantastic, man. Anything else you want to say before we wrap up?
No, I think we covered everything. Look forward to the gains, and glad to continue to stay in touch with you, and also seeing how your business grows, because I think it's a great framework, and I can see how it's useful for a lot of people. So I'm interested to watch your growth as well.
And
you
are in the Skool community, you are in the WhatsApp group, and one of the things that I told you that I want to do as well, because we make decisions focusing on the long term. So like every 6 months, it would be awesome if you could send me a screenshot of your performance.
Yeah,
Because-
definitely.
Yeah, because some of your holdings you will get quick doubles in a short amount of time. So for example, with Novo, your cost basis is so low, I don't think it will take a long time for you to double that money if they continue rising as sharp as they are. But other companies will take a bit longer. What we want is over time, that 3 to 4 year period, then we are doubling our capital. Cool, man. Look, always reach out to me if anything is required, and all the best as well. And yeah, let's be in touch. Thank you so much.
That's fun. Cheers, Eduardo. Have
Cheers,
a good
man.
one.
You too.
See you.
Bye.
Bye-bye.
Thank you.
What Merlin just described, that shift from feeling stuff to being fully in control, is exactly what Like a Tortoise is all about. So it's not about becoming a full-time investor, it's about building a framework that fits around your lifestyle, not instead of it. If this resonates, and if you find yourself in a position where you have some money sitting idle and you have no idea where to start, click the link in the description below to jump on a free advisory call with me. I would love to build your own version of this.